Macro markets, I guess today is actually a very reboundish day. Nasdaq's up almost 3%, I believe.
Everything's just been hit so hard lately that it's not surprising to me that we have kind of a rebound here. That it
Mhm.
might be short-lived, frankly. So it just so happened that this past Friday was the biggest options expiration day since I think it was March of 2020, which just the removal of all of that kind of negative delta dollar exposure from the market could lead to a rally. And so I think that's kind of the most logical driver that I can see of what's going on with
Yeah.
markets today.
The quarterly options for index options, that's what the institutions, that's what the big money uses for hedging, right? Because they're so liquid. You have a higher multiplier for every, index option contract versus see when it stops. Is it going to be another quarter of that? Or are there enough people on the sidelines that find valuations so attractive that they just sort of flood into the markets enough to counteract that, and the market kind of starts continuing up again? That's a multi-trillion dollar question, I guess, right now.
Everything's like deep cuts across the board, but I think there's going to be some of these companies that stay beaten down and probably die and never recover.
Most days, it's like I look at my screen and all the stocks are red or all the stocks are green. It's
Right.
like it's not like it used to be. We're in this weird time where we're just hanging on every word of the Fed. Surprises me though, the whole crypto category is sort of so correlated with the growth tech stocks. And one of the biggest arguments for crypto all this time, or especially Bitcoin, was it's an inflation hedge. It's not the case. It's just another speculative investment of some sort. I've had Bitcoin since 2011. It's always been very speculative, and it's not always correlated to the market though. But now it's very correlated to the market because it's become so much more mainstream almost.
I think the call for greater regulation that a lot of people are calling for now is going to be a good thing ultimately.
And did you see the Elon interview from last night with a Qatari Bloomberg conference or something? And do you think there's a number of investors in that crowd that he feels compelled to show up for?
I do think it probably makes sense that he would show that extra effort to kind of get the Twitter deal done. He's very clearly trying to move forward with it in my mind. So,
a few hours after his comments, I saw the Associated Press report that the Twitter board is now asking all of the shareholders to vote. So they're trying to move this forward. And going back to Tesla, FSD beta have had it, and it's been really impressive. To me, it feels like it's only a matter of time, a year or two at most, before the FSD beta becomes smooth as silk almost.
The thing I would say is it's really important to keep in mind the trend, and the trend is just a remarkable improvement.
As much as we're expecting a slowdown in Tesla's quarter-to-quarter delivery number because of the Shanghai shutdown, this has got to be really good news if Tesla delivers 70,000.
Like the solution is to do the 2170 line. Oh, I think it'll affect the earnings potential possibly, and the cars that are going to have the 2170s won't have some of the characteristics that the 4680 cars will have. So it's not like the sort of thing that customers are going to demand like a 30% haircut because you got a 2170 car. So
I really want Lemonade to close this Metro Mile deal as soon as possible and get the car insurance rolled out. It's funny.
I try not to get too specific on like how low it can go in the medium term, but what I like to do is go out to say 2023 or somewhere a little bit further out and do like a bear case.
I'm not sure it's going to move the stock. I think it's like sort of a space industry thing. Like people have to start valuing the space industry again. And I think 2023 could be the worst year for Lemonade in terms of losing money, worst case. And if they lose money beyond 2023, my thesis was probably wrong.
I think there's a reasonable chance that 22 is the peak loss. The marketing that they're doing doesn't make sense for the lifetime value of the customers that they currently have. They shouldn't be spending as much on marketing as they are. But what you've seen is that this in-force premium per customer is growing like really drastically each quarter, which is a really, really good sign.